In a rare move by the Federal Reserve this week, they actually showed us the hand that they're playing. Seems like for the first time ever, and it's been very helpful to take the hard edge off of all markets. The economy in general seems to be normalizing. Bond, stock markets, they both love it. Mortgage rates, nice move down this week in anticipation of the Federal Reserve's future moves. Now let's see if this newly found inventory can start moving again. Welcome back to This Week in Mortgage, everyone. I'm Sam Battaglia at Mortgage Black in Beverly Hills. I hope you had a great week. All right, the Federal Reserve, very interesting, rare move by them this week. They actually told us what they plan on doing, telegraphing things basically, which really has seemed to have taken the hard edge off of all markets. A few notes by me. I think they think the stimulus that was put into the system, the trillions of dollars, may have already worked its way out or coming close to, enough for them to forecast it at least. So that allowed them to speak in future terms. Looks like they're seeing around the corner right now with economic data. They knew if they kept their foot on the gas with raising rates or not mentioning a cut of rates, which they did this week somehow, that there would be some cracks in the system that might not be repairable. So I applaud them for seeing around the corner. That's really good. The economy during this time, these last few years, did not break, and the U.S. consumer did not break. So I must give the Federal Reserve credit. It seems like they walked right to the edge and seemed to have reeled it in and walked it back right on time. Now, as we know, sentiment has definitely changed this week, and as we know, sentiment and confidence is the most important thing when it comes to anything. The economy itself seems to be normalizing, as it has been through the data we've seen. And the Federal Reserve is obviously reacting to that. So, as I mentioned, stocks are up. The Dow hit an all-time high this week. Bond market, people have been buying bonds, driving the yields and interest rates down. Bitcoin's up. Someone still needs to explain to me how and why. Oil and gas are down. I completely understand that. The banks right now seem to be safe and liquid. So that part of that part of our economy, that sector seems to be good, I guess, for a lack of better. Now we need sentiment to really shift and people to start feeling more secure. When people can forecast, whether their forecast is right or wrong, at least when they think they have the ability to forecast, they seem confident in things. And we all know forecasting is good not only for actual business and letting things play out in personal lives and in their business lives, but for the mental, it's very good to be able to have some certainty and be able to forecast. Mortgage rates, 390 and change on the 10-year Treasury today. This is down a lot in the last 6 weeks, 7 weeks. Certainly, obviously, affordability has helped out. Secondary markets now, where these loans are bought and sold. A mortgage is basically a piece of paper. It's a contract with a guaranteed return to the investor. So the secondary markets, Fannie, Freddie, private investors, whoever it may be, they should relax now and feel some relief and take the hard edge off of the interest rates that was a little bit artificially high because they didn't know what was going to happen. It's tough to forecast. This should naturally calm rates down. And hopefully the next thing we see, and this is a big thing, the loan level price adjustments. So in the past, there wasn't, certain times in the past, there wasn't a huge spread between owner-occupied second home, non-owner-occupied, credit scores being so extreme, difference in pricing, and loan to values. Well, we saw the market tighten up with all of these spreads start to widen. Hopefully now, since people should have some confidence and be able to forecast, we should see the spreads, for example, between an owner-occ property and an investment property start to get smaller, and that will definitely help affordability out and allow for a little bit more speculating, which I understand is not what the Federal Reserve's intention, but that's, of course, what's going to happen when people feel better. Okay, everybody, that is my show for this week. As always, thank you so much for your time. Happy holidays to everybody. Please take care of each other. Be a good neighbor. Do unto others, the golden rule. Friday here. Seems like a nice day. Hopefully everybody has a safe and happy holiday